Okay. The meeting is being live streamed, Aaron.
So now, committee, we want to introduce John Paul from CLA. CLA has been the district's auditors for quite some time. For everyone's information, the board hires CLA. We go through a purchasing process and RFP process. We go through a contractual process. All of those pieces, again, will be covered by purchasing. If we need to look at other ways in which we do our RFP process and how we do our overall contractual process. What we're asking Jean Paul to do is come this time and preview of coming attractions. He'll be back this session once the audit is complete and issued to the board. Once, as again, I said CLA works for the board. So he will be presenting the audit and no audit findings. He will be presenting no audit findings to the board. That was a head nod to John Paul. And so then once he has done that and CLA has presented to the board, then he will come back to the committee and do a further report to the committee and answer any specific questions for the monitoring report itself. So John Paul, I will turn this over to you.
All right. Thank you, Aaron. Not sure that I'll be quite as brief as Phil was, but I anticipate still being quicker than what's on the schedule at least. So again, my name's John Paul Le Chevalier with CLA, or Clifton Larson Allen. Basically, the purpose of this this presentation is we're at basically the beginning of our audit field work. Before we'll kind of get everything wrapped up over the next month or so. So at this point, basically introducing myself, making sure that the Finance and Audit Committee is aware that the audit is going on, who we are, who to reach out to if there's any questions, comments, concerns, risks, basically anything financial related that would make sense to discuss. So basically kind of give a brief overview of the audit. Again, introduce myself so you know who to reach out to, know that we're starting on the audit, and that's pretty much it. So that's the goal for this presentation. So briefly talking about the scope of the audit, there's really two main components. There's the financial statement audit, which will be the annual comprehensive financial report, which is the majority of the district's annual financial audit. The majority of the pages of that report is going to be those financial statements and footnotes. Then there's also the single audit, which is a required audit over federal awards for any government entity or non-government entity that's received over $1 million in federal awards, which the district easily clears that every single year. There is a kind of rotating process of which awards we look at. For this year, we are anticipating looking at the IDEA, or the Special Education Cluster, as well as the Emergency Connectivity Fund. Aaron and I have been looking. There may or may not be one additional award that would be tested depending on where the final numbers land, but that's what we're initially expecting. And so all of those awards are presented within the schedule of expenditures of federal awards, or the CFA, that gets presented as a component of, towards the very end of that annual comprehensive financial report. And then as Aaron is wanting to make sure that there's nothing included in this last section, but that would be any findings or recommendations that we would have would also be included within the audit report. So we do have a couple of slides here on our responsibilities as the auditors. Mainly, I wanted to just focus on some of the items on the second slide. I guess mainly our audit is focused to make sure that the financial statements are materially correct and presented accurately. The analogy that I like to use is that the district, if the financial statements are a book, the district is the author of that book, and we would be the editor of the book, making sure that what's listed in there is correct and factual based on the activities of the district. So that would mean that the district is responsible for the creation and accuracy of the financial statements, and then we're basically double checking to make sure that that is correct. We do have a lot of time spent over internal controls and making sure that those are in place and that there's a good environment for the accuracy of those financial statements, but we're not specifically issuing an opinion over internal controls. We're also looking to obtain reasonable but not absolute assurance over whether the financial statements are materially correct. What that means is that we review samples, make sure that the large dollar amounts are correct, but there is the possibility that since we're looking at samples and not every single transaction, that there could be errors or mistakes that are not detected within the audit procedures. One of the things that I'd like to highlight is that we do consider fraud risks and do have certain procedures over fraud, but the audit's not primarily designed to detect fraud. That's something that's a common misconception, is that the audit is primarily going to be looking for fraud. If you've been around audits for a while, you know that that's not the case. But again, we would hope that looking at those internal controls and making sure that the environment is of quality nature would limit or reduce those fraud risks. There's a couple things that I wanted to bring up with specific to fiscal year 2024. There's no new accounting standards that are expected to significantly impact Adams 12. I think there has been a new accounting standard every year for at least the last 10 years. Just sometimes they impact or have more significant impacts on the financial statements, and sometimes they don't. There is a new accounting standard effective for this year. We're just not expecting it to significantly impact Adams 12. There is also a couple of new auditing standards that are effective for this year, but one that I wanted to highlight is Statement of Auditing Standards 145, which does require additional procedures relating to IT systems. So this has already been mostly complete at this point. I just received an update that the IT team is working on wrapping things up and anticipate having that fully complete probably within the next week or so. So we are utilizing a separate team within CLA of IT audit specialists to perform those procedures. So if there's we may have, basically the scope is expanded a little bit relating to IT, and we are, so we may have some recommendations, again, depending on what the results of that was. So that's primarily focused on making sure that IT has good policies and procedures, again, to kind of create that effective environment for things to go smoothly. It's going to be looking at user access, making sure that the appropriate people have the appropriate amount of access, looking at IT backups, making sure that there's a system in place that if something happened, that all the information of the district wouldn't be lost, as well as a number of other things, looking at firewall settings and a bunch of other security items. So there's always more that can be done with IT systems, and certainly a lot more procedures that could be performed than what we're doing, but it is a required now audit step to perform a little bit more into the IT space. So just a heads up that is included this year. I also did just want to briefly bring up the net pension liability relating to PARA. This has now been presented for 10 years, so it's been a while that this has been presented, but it's typically kind of the annual financial statements are one of the only times that this would be reviewed. This is PARA's overall liability. If you take out the small percentage of that relates to Adams 12, that's what gets presented on the financial statements. This is not something that the district has any control over. It's really more of a disclosure, but because it goes on the financial statements, I did just want to give a heads up. The amounts that we're expecting to see this year. So last year it was about 674 million, and this year we're looking at 809 million. So a pretty significant increase in the net pension liability that will be presented. Though overall, based on there's a whole bunch of hundreds of pages of requirements relating to the net pension liability, but part of that is that overall change, the a little over 130 million increase in that liability. Not all of that's presented as expense within fiscal year 2024. That gets smoothed out over a number of years, as well as taking into account the kind of the smoothing impact from previous years. So while there is an increase of about 130 million, we'd only expect to see an increase of about 19 million in expenses for fiscal year 2024. So again, it would be an additional expense relating to the net pension liability, but not nearly as significant as what the overall change in the liability is. Also wanted to just point out that there is what's referred to as OPEB, or post-employment benefits other than pensions. The other goes in front, which is how you get OPEB. That also relates to para. It's a much less significant amount, and that actually did decrease, going from 23 million in fiscal year 2023 to 20 million in fiscal year 2024. Again, one of the items that similar to the net pension liability gets looked at once a year typically. So just bringing that item up. In terms of the timing, we did already perform on here. You can see the planning and interim procedures were performed over the summer. That included reviewing internal controls and some of the single audit requirements. We're starting on final field work now, which would be making sure that the ending balances are correct and everything else is set up to be able to issue those that annual comprehensive financial report, including the single audit, which we anticipate to be completed around the end of October. And then we do have the audit committee meeting scheduled for middle of December. So again, just really from here, wanted to highlight the communication between the audit committee and CLA. We do, as Aaron mentioned, report directly to the board. We work quite a bit with management of the district, obviously, especially with Aaron to perform all of the audit procedures. But this report does go directly to the board as well as to the audit committee. And so one thing that we want to make sure, and why we're having this meeting, is making sure that you're aware of who we are. If you do have any questions, we highly value your input, especially on any risks. If there's something that's a concern that gets brought up, we do incorporate that into our audit procedures, especially the sooner that we hear that, the better. So for example, we did have with another client a concern that was brought up by a member of their audit committee relating to P cards. And so that was something that we incorporated into the audit to review for their concerns. So things like that. And again, if there's not concerns, that's fine too. But just wanted to make sure that you're aware of who we are and how to get in touch with us. So with that, that's all the items that I have. Just want to open it up for any questions, comments, any other discussion items, etc., before we wrap up this presentation.
Please feel free to unmute your mics or to type any question into the chat so we can get those questions to John Paul. I'd like to also emphasize a little bit about what John Paul said, in that where we see questions at times or where we see assumptions at times. One of those assumptions, and he shares this with the board, is the auditors, no auditor, including CLA, has been retained to pass judgment on what we spend our money on. So if we said, sometimes we get a question from the board that is, do you think that do you agree with what the district is spending on? Are they spending too much on salaries? Is their fund balance high enough, etc.? And those decisions are really decisions of management, and that has not really been any piece that we've retained CLA to do. Is that clear, John Paul? Did I say that correctly?
Yeah, no, I think that that's a really good point, Aaron, is that we're making sure that the financial information that's presented is accurate so that management of the district, as well as the board and the audit committee, can make decisions on what the district should do with that information going forward. But unless there's a concern about fraud or something that is egregious, our role is not to make comments or judgments on what the district is spending money on, what the emphasis is. It's more to just make sure that if the district says that it spent, $1 million constructing a building, that's what actually occurred. So.
And the last piece I would just emphasize John Paul's comments is in the presentation, he talked about both internal control and material misstatement. And in those words, what I want to make sure that the committee is aware of is whether or not the district has internal controls in place so that if there were a material misstatement, we would have internal controls or processes and procedures in place where we meaning the district, we would have been able to identify it ourselves. And if we lack the internal controls, or if we lack any financial processes and procedures that would lead to a material misstatement, then that is something certainly that CLA's job is to alert the board that we do not have a system of internal control or an environment of processes and procedures that would be able to identify any potential misstatement on our financial statements before they were presented to the auditors, before they were presented to the board. Obviously, we can't do that if we do not have the processes in place to identify it. And as John Paul mentioned, he is not opining upon whether it is absolutely free, but they are looking to make sure that they have assurances, and John Paul, you can emphasize the correct phrasing, to ensure that no material misstatement either has been identified or has been possible. And then we don't have to talk about these potential ones today, but that's sort of the top one that is the worst, and there are different gradations beyond that. And I wanted to make sure that the committee was really aware of those two aspects, both of what a material misstatement is, and then the role as it relates to what we're actually spending our funds on. So, John Paul, did I say with some level of accuracy the piece about material misstatement and internal controls?
Yes, no, I think that was a good summary, and I think the one other thing that you mentioned is that what we're looking at is to see that the district has the internal controls to detect any of those issues within its own structure. So while we are double checking, we're not part of the internal control structure of the district. So we may be helping to make sure that there's no material misstatements within the financial statements. We're also, according to auditing standards and what's required, not part of the district's internal control structure. We did have one question in the chat relating to what was driving the selection of the IDEA program. So there's a number of requirements that the federal government has. I would say that part, the single audit, is the most defined structure in terms of the audit procedures the federal government lays out. They have guidance every year of this is how we want you to select programs. This is what procedures we want you to perform. And they do, I mean, obviously it's not exactly everything that needs to be done. It's guidelines, but it's quite a bit of information. One of the requirements is that any programs that are of a significant threshold are tested every 3 years. And so the IDEA program is one that gets tested every 3 years based on being one of those significant programs. So basically, the last time we looked at this was 3 years ago, and so we're looking at it again this year. Title I being another program that gets looked at every 3 years. ESSER was a required program every year until this year, where that's not a required program. And then the Emergency Connectivity Fund, being a newer program, was one of the other ones selected. So that's part of the justification for that. There's a requirement that for low risk auditees, which the district meets the criteria for, that at least 20% of the federal awards are tested. So that's another component of how those programs are selected. Great, thank you.
One of our other major programs continues to be nutrition. And that is, again, one of those that are on the rotation, as John Paul said, around that 3-year rotation where they touch all of our major programs, IDEA, title, all of our title funds. When we look at nutrition, and then this particular year, the district, and this comes from the FCC, and it's a different program of the last couple of years that was possible because of ESSER funds through the FCC, that is the Emergency Connectivity Fund, and what the district did with those funds over the years is purchased Chromebooks. So that those pieces John Paul will be looking at specifically this year because of the size of the program. And then any other questions? Kelly, thank you so much for that question. It was great. Great question. As you know, Kelly, that was a great question. I'm not saying anything that you didn't already know. Of course, it was a great question.
Thank you, dear.
And John Paul, just on a side note, I did load that 24 FY24 CFA up to the drive where I did the math at the bottom. I do believe that with both IDEA and ECF, we have some new news to share with you around ECF. So I'll load those comments that we received over the latter part of last week.
That sounds good.
Any other questions before we move on to the final topic? Again, this is not the last time we'll be able to contact John Paul or hear from him around the audit. So thank you, John Paul, so much. And thank you for you and your team and the work that you do on behalf of the district, and you've been doing it well for a while. For quite some time, CLA has been the auditor of the district, and we appreciate the partnership in their work for the board.
Absolutely. Thank you, Aaron. And again, if anyone has any comments, questions, things that pop into your mind after this meeting, my contact information is included in the slides. And then obviously, if you can't find that, feel free to reach out to Aaron and he can connect us. So otherwise, I appreciate the time this morning. Thank you, everyone.
Jean-Paul. Great. And now we will transition to the last part of today's review of the monitoring report. In this particular section is one that is a recurring theme. So let me pull up my schedule and make sure that those pieces are there. Oops. One day. And Carolina, did you have the CLA presentation that you were going to put in the September folder?
Yes, I actually just put something in the chat reminding them. Yes, it's in the September 26th folder. Yes.
I don't see. And then did you put the other monitoring report in the drive as well?
The new one.
Yes.
Yeah. Hold on a second. I have the workbook there, Aaron, not the monitoring report.
Okay, with us 1 second. So every quarter we present, meaning Gina or I would, in her absence, we are required to present to the board a 2.4 monitoring report. This monitoring report is available on board docs because those are when we are presenting it overall to the board. And what we want to do today is share that with you. Sorry, thought that we have that already saved to the drive. So bear with me while I go I'm finding it. Okay, so I will share my screen. And again, this report is always available both on board docs after the meeting, etc. But we want to be able to pull out a couple of pieces on the monitoring report and put some emphasis on it so that what you're doing is seeing again how this relates to your work as well as how it relates to the superintendent's monitoring of or the board's monitoring of the superintendent. The first piece is we look at compliance with TABOR and we ensure the board that our TABOR reserves are what they need to be. This is both a 3% requirement of fiscal year spending, and then we also have a reserve for multi-year contracts, and the district has one multi-year contract that is a portion of prior master agreement, which is no longer in place, which relates to payments that employees receive once they've retired. We also ensure the board that we are keeping track of our 4 charter schools and ensuring that those 4 charter schools also hold the 2 required reserves that they have in place. The first reserve is they are also constitutionally required to hold a TABOR reserve, and then contractually with the district, they are required to hold a reserve for special education, and that is the contract reserve that we have for all 4 districts, all 4 charters. I apologize. The next piece that we look at is the overall forecasted unassigned fund balance. And again, this is when the board gets these reports, it's always on the prior quarter. So this would be on the quarter ending July 31st of 2024, which is also the end of the fiscal year. What we know and what we can see here is these again follow the interpretations of pieces that we are looking at. Some of these are not given to the committee as pieces that the committee would review, but these are pieces that the finance group and the superintendent are reporting compliance. So when it says the district's performance complies with the standard, that is Chris's assurance to the board that we've applied to the standard. The board's policy on unassigned fund balance is 4% with a maximum of 8. And we are, as you can see, we are well underneath the maximum of 8%, and we are above that minimum unassigned fund balance. I would do this by color, but I'm colorblind and I could not tell you what those colors are, even though I put this together. The next one deals with further deals with fund balance, which we believe is fairly redundant. And the next piece deals with the district's overall cash. And this has to do a lot with liquidity and ensuring that the district has unrestricted cash in order to run the operations of the district. This you would assume that we would always pass. In prior years, you can see that in February tends to be our lowest point for cash. This is very important for you to understand, for the board to understand, is because for the first 8 months, 9 months of the fiscal year, the bulk of the cash that the district receives is the state share or the state share portion of total program, and then the portions of our mill levy that are collected. But until taxpayers receive their bills and their first due date is in February, when those are collected in February, they are paid to the district in March. And you see this dramatic uptick in March that gets us additional cash infusion. Again, in April, all we would receive is the state share and mill levy override payments. Because then the second half of property taxes, when those different pieces of property taxes are due, and you can see then that we run right up into May and June. And June is always, the end of June is always the district's high point for cash. Historically, we've had the opportunity to participate in the state's interest-free loan program. The interest-free loan program is exactly what it says. We would borrow money from the state and pay no interest through the month that we were lowest. Here it would generally have been February, and then the district pays it back by the end of the year. So this is not a Tabor issue. We're not doing any sort of long-term borrowing. It is a very short-term borrowing. It does not require a Tabor ballot initiative or the approval of the voters. It is then last year, and I think we may have shared this with you, certainly shared it with the board, the state changed its formula and they are no longer paying their portion of total program over 12 months. They're now paying it over 9 months. That may sound somewhat immaterial, but what it means is the district's position in February will be approximately $50 million higher than it was before, because the equalization payment is meant to then ensure that we are receiving approximately 12 equal payments of total program, regardless of source, meaning regardless of whether those payments come from the state or from our property taxpayers.
Aaron, there is a question in the chat. Sorry.
Let me pull that up. I can't remember how to do that when I'm presenting.
Sorry, Aaron, I could have just unmuted too. You might have just addressed it with what they just did in the special session with property tax relief.
Right. So again, depending on what happens at the ballot, then the property tax calculations would change for the majority of property taxpayers, both commercial and individual homeowners. Those pieces would then create for the county a different assessment rate for school districts versus other taxing entities, including the counties and the cities. When they do that, we would not expect in the first year for that change to have a material impact on the district. Going forward, however, the bill as it was passed would then limit the growth of AV, of net assessed valuation, on a go forward basis. So if the net assessed valuation were to increase, the state would not allow the assessors to increase the AV by that amount. What happens then is there is a possibility that it shifts back the responsibility to a higher amount of total program to the state. For the last 10 plus years, school districts, taxpayers, property taxpayers have been paying a larger proportion of total program. This will begin to shift that back around where the state would then be needed to pick up more of total program. Our concern and the majority of CFOs around the state for all of our school districts do believe that this puts the state at risk in the future for not being able to afford again its portion of total program. And in my personal opinion, and in the personal opinion of some folks that I trust, we believe that should that happen, we will see the negative factor again. So the budget stabilization factor would need to be reintroduced because it forces back the necessary growth of total program back to the state and away from any sort of assessed valuation growth on the districts. James, what we won't know for now is how the AVs will come in December. Again, this is after the election, and the assessors don't know which law will apply. Until then, it could be one of three potential laws that will need to be applied. So I think the overall concern is that there'll be nothing initially impacting the district, but it could have an impact on the state in future years.
Okay, thank you for that. And not that it matters, but I share your personal opinion.
I don't believe how it would change the cash flow is, again, in theory, all things being equal, at least in this would be we're in 25, 26, the 26, 27 year, it would probably increase the district's cash flow and make it even better to the point that it was being paid for by the state in more equal payments. The concern then is what would happen in the future. So very good question. Thank you. And there is more that came out on this past week in the economic forecasts as well. We do show just quickly that the district is not spending its fund balances down, with the exception of, for example, capital reserve. Here we would spend down capital reserve by $2.6 million. In that, as you can imagine, would fluctuate year to year. We also have debt service payments within capital reserve for COPs and leases. The other special revenue is more related to activities that are at the schools and some that are at the departments. And that again is outside of the general fund. Here we're making sure that there is not a significant continual decrease in the district's fund balance that would make any future spending unsustainable. It's a very good piece. I think it's probably can be written a little bit better, but we want to make sure that both liquidity and fund balance are there. Here, we tend not to need to spend too much time on fees or penalties that the district might receive. We're not in control of what those penalties might be. Here, over the last 12 months, we've had issues, and all school districts have had issues with Xcel Energy processing timely payments. And so that has been really an issue for us. You can imagine with fewer payments necessary for universal free meals, that our accounts receivable are generally lower. Our accounts receivable then is under student fee payments. And what happens there is really student fees start individual families, etc., start to apply for free lunch, and those fees that then would be waived. The superintendent cannot borrow. This is constitutional, a state law. It's district policy. The district cannot borrow without going through the Board of Education. All of those pieces are there. We've spent down now our entire bond proceeds from 2016 and 2018 into the pieces that we would normally report in the monitoring report are no longer relevant. We also look at how each of the mill levies, each of the existing 5 mill levies are spent in accordance with this board goals. And that has a lot to do with the current strategic plan and making sure that we're spending those amounts on what was required under the strategic plan. Remembering that mill levy overrides are shared with charter schools on an equal per pupil basis. So we walk through with the board the amounts that we've spent and how we're tracking those as well, and those are all being tracked within the system. Here, whether it be enrollment growth or enrollment decline, we're not committing any sort of revenues that we need to not just have needs associated with potential new schools, but because we're in a declining enrollment, it would just be that we would not want to, before we've spent any new and remaining revenues received for any new students, that has not been a requirement or a piece that has been in there. Here we make sure that the adopted budget does what it's supposed to do and includes funds for the debt service payments. We've already talked about, the annual audit. And again, we'll make sure that this is saved out there so that you know that it was produced and that there were no pieces of policy prohibitions that the superintendent compliance statement interpretation would not have met the standard. And so many of these we will revisit because they're part of the FAC's responsibility. So some of this we will come back to. This is one of them, and this is the district's overall market portfolio. These are pieces that we will do again. As this is out there, and we'll make sure that this is saved because it's currently on board docs, it then just shows you that we are in compliance with presenting a internal monitoring report or even an interim monitoring report for the period ending June 30th, 2024, and that we're in compliance with issuing that monitoring report to the board. Did want to walk you through it. I don't know if there are necessarily any questions about it. We do not find that the board asks very many questions about the monitoring report itself, but that it was issued. Okay. So that is the last piece that we have on the presentations. So we're going to go ahead and stop the public portion of the meeting.